Good Arvo. Good Arvo. Over here in Northern Territory. Just looking at the Nasdaq. This was Friday. It's funny, I got on the computer trying to look at the charts, but the market's closed. But for me, my time, that would be like about to open, because it opens at Sunday at 6 p.m. but New York time. But over here it's Sunday 5 p.m. So it's like I got on the computer trying to see what's up with the markets because of like the bombings that just happened in Iran. I'm trying to see what's going on. I'm assuming it's gonna there's gonna be a big discount gap. A discount gap, just saying, is just another way of saying this, like it's gonna go down. It's getting hot in here, so take off all your clothes. But nah, it's been exhausting. Sorry, it has been exhausting. It's been annoying. Like, all these significant events have been happening since the start of the year. It's like I can't catch a break. But luckily, I got this nice trade idea on Friday. As you can see, I have one open position, and then there's a position that I got stopped out at on the left. I just shorted it too soon. I should have waited. So see that buy side liquidity I have outlined there? I was waiting for either that to get swept or a short-term high to get swept, so I just didn't wait. Well, where I fucked up is, you see where my entry is at the sell side imbalance, buy side inefficiency, that green box I have highlighted right there? I didn't wait for that to appear. Instead, I was eager, and I didn't wait for the SIBI to form to create the entry for me. And this is at the open, and I haven't traded the open forever. I think this was one of the first times I traded the open since I've been in Australia, just because it's late. Usually I don't get to trade the open. One thing I didn't like about this trade is I had like a pretty big amount of risk. But yeah, I have there's a lot of sell side liquidity here. As you can see, they're on the right side of the screen, the relative equal lows sitting right above and below a new day opening gap. And there's just a lot of there's like 2 new day opening gaps. You can't really see them because the font's in white. I messed up. I should have put the font in red. Usually it's in red. Yeah, there's a lot of sell side liquidity, so that's my draw. That's not necessarily like what I'm aiming to hold on to for it, because I ended up I'll end up reviewing how far price goes down at the end, but just keep note of that sell side liquidity. See that right? I don't have it annotated on the video, but on the right side of the screen, you'll see the relative equal lows sitting right next to right above the new day opening gap. That's a strong draw on liquidity. The 15-minute does a really good job of outlining where direction's gonna go, at least for like sessions, because you can do like session trading where you just trade the morning session and the afternoon session, or you can do day trading where you put in a position at some point in the day and you don't check it till the next day, or you don't expect it to pan out into the next day. But for me, that's too much time. I don't think I have, at least right now, I don't have patience to like wait that long. I'm also better at determining bias on a smaller time frame. Higher time frames, not so much. Probably because I haven't really practiced it much. I'm usually always on lower time frames. But they say the higher the time frame you go, the easier it is to trade, because there's so much more fluctuation on the lower time frames. Like, just look at like the 1 minute and look at the 15 minute. See the 15 minute, like there's one clear move, and then it goes down. But here on the 1 minute, it's like really choppy, like back and forth, back and forth. That's why they say the lower time frame's harder, but the lower time frame also shows you the most opportunities to get in a trade, like the sell side imbalance, buy side inefficiency. That I I didn't get in, so my entry was bad, so I didn't get. See how that green box is? Price is like, my position is lower than that, but I use that as an idea to get into the trade. Sometimes you're gonna miss entries, but you still want to be along for the move. So you get in with the market order. And the market order is just, you're just buying price at what it's at right now. Or you could put limit orders in, where it won't trip you into the contract until it hits that a certain number. But anyways, I don't think I'm gonna trade Monday. I might not trade till like middle of the week. It's honestly just so risky to trade right now because so right now I'm gonna outline the opening range gap. It's something I haven't really been able to trade with recently because I just don't trade the open, and this only appears at the open. So the midpoint of that is a draw on liquidity, and for me, like, I don't like you can see I'm only trading one contract. So all my trade ideas, my draw on liquidities, those are targets, right? But I like to trade like, see how the opening range gap only appears during real trading hours. Electronic trading hours doesn't show the gap. That's why you have to switch it to real trading hours in order to see it. And the consequent encroachment of that gap is a draw on liquidity, especially if there's liquidity hanging lower or beneath it. Vice versa too, if you're going to buy. But back to my point, I'm always gonna be trading like like if I'm taking my first partial, I'll take my first partial at the consequent encroachment of that or near it. Because really I would have two more contracts in and just let that run while reducing my stop loss as price goes down. But since I'm only trading with one contract, I'm treating every trade as if it's just one contract. Like you wouldn't want to just let one contract run that far down without taking it, like, anything off of it, if that makes sense. Like it's more important to practice the habit of taking the profits when, especially I'm 30 handles away at this point. That's a lot. I mean, as you can see, it's a pretty, I think that's like a good amount of money. So like, why would you not take that? Why would you not take a contract off there and just pocket that profit, and then just let, if you had like more contracts on the trade, just let the rest of the trades run out to your original much farther objective, when you could just get the low-hanging fruit. And for me, that's 30. I think I'm moving my limit to 30 handles in a second. 30 handles means, like, see like the numbers on the right side of the screen here. Each one of those is called a handle. It's just $1. So $30 in price delivery is what I captured. So for me, that's more than enough to take a partial. And then just to reinforce the idea that the consequent encroachment of the opening range gap is a draw, I draw it out again, and you'll see it get hit shortly. I think it hit it there. Lola's Paragola. Yeah, I'm not really interested in trading this week at all. Just doesn't seem like a very good time to be in the markets. I'll for sure watch it though. I'll watch how the market, I think it hits it there, it blows through it. But the point is, like, it's a draw on liquidity, and there's even more draw. There's a reason why it's going like down here, and you'll see at the end of the video how far it actually goes down. Just keep that sell side liquidity in mind, because towards the end of the video it'll jump to a different it'll jump into later in the day when this move fully unravels. But yeah, that's what I like seeing. I like forming my trade ideas, getting profit, securing it, and then watching it pan out. Bust up on a beat, ho. Listen to the track, bitch. But yeah, overall pretty this is a pretty nice trade for me. See all that new day opening gap, first presented fair value gap, and relative equal lows. It's such a strong indication that price is going to go down. But the hard thing is that price isn't always this perfect. Like, I mean, in this instance, small instance of time, where it's just it's going straight to your objective, it's not always like that. Sometimes it's very choppy and it retraces a lot. There I'm outlining all that draw on liquidity there. Whoa. But yeah, and then thinking a little bit, it'll transition to the clip of how far it really went down. Bust up on the beat, ho. Oh, here it is. See, on the right hand side I have the daily chart pulled up for some reason, but I believe that's where I took the trade earlier. Damn, I can't tell. Okay. Yeah, you see that white box that I highlighted beforehand? I was like circling it. I was like, that's a draw on liquidity. That's like, it went way below there. Yeah, that's pretty much it. Yeah, and I could have held on to all that too. I guess that's like one of the frustrating part about it, is like if you cut a trade too early, you miss out on a lot. But I think it's better to make sure you're not being too greedy, rather than like, because like when I'm trading with real money, I think that'll help me out a lot more than being greedy. That's what fucks a lot of traders over, I feel like. But yeah, that's it for the video. Pretty short, pretty chill.